Conservatively, this thing's like a 2 or 3 bagger, but I could see this thing being like, 5xing.
Today I'm talking to Lee Roach about an interesting company based in Florida that's trading well below its liquidation value. Even better, there's a solid catalyst for realizing a good portion of that value. But first, if you haven't already, take a moment right now and subscribe, because that's the best way to tell me to keep producing content like this. And now, Lee Roach. Lee, what company do you want to talk about today?
Today, I think I'll be talking about Alico, ALCO. They're the ticker. They're a citrus producer that is basically pivoting away from citrus altogether. This will be their last season. And they're long-term going to develop 25% of their land into residential holdings. And over the next 5 years, they plan on basically making their market cap back and then some off of just some real estate. Not even all of that 25%. I think it's 15% of the real estate development.
Interesting. So they're going to be developing 15% of their real estate, and they're going to make up their market cap just with that small amount of land?
Yeah, so they own property right by Fort Myers, Florida, which is the fastest growing metropolitan area in the United States. And they basically have like the last piece of land that you can really develop in that area without like really going into a swamp. And if you develop in any of the areas around that, you pretty much are gonna double your drive time into actual Fort Myers. And there was a company that had just purchased, I think it was 2,700 acres of property in that area for like $93 million. And they plan on getting like, I think it was $83,000 a lot for that property when they actually do develop it. Alico has 4,600 acres in that Corkscrew Fort Myers area that they plan on developing. And they plan on developing that property into a much more dense like development. It's going to be like basically these things called the Corkscrew villages.
Okay, so what do you see as the upside potential for this company over the next year to 5 years?
I think conservatively, this thing's like a 2 or 3 bagger, but I could see this thing being like, 5xing potentially.
Interesting. Over what time period?
Probably the next 3 to 5 years.
Wow.
This development stuff should be moving really fast. I have been following this company for a really long time. And they've been talking about developing their property and potentially pivoting away from their citrus operations for like 4 or 5 years now. They've had colliers on their land to assess all their properties for higher use values for that entire time period. I might be getting my hurricanes mixed up, but there was Hurricane Irma and Ian that both hit their properties particularly hard. Want to say the first one was Ian. After that event, which they had to take out major insurance claims for, and it damaged a lot of their groves for a couple of seasons after that, they really began thinking about pivoting away from citrus. And now that they're doing it, I think they're going to make a ton of money, and I think that investors will probably see that return to them in the form of like special dividends.
Interesting. So what do you think the company is worth right now?
They're trading at like $32 a share. I don't know. I expect I would not doubt if by the end of this year, they would be trading somewhere around, like the low 40s, and peaking into the 50s over like the next like 24 months.
Mm-hmm.
I think the biggest thing is that Corkscrew, they have a couple of properties that are in the process of getting approved for development. And I think that as soon as those Corkscrew villages start actually breaking ground, I think investors will get really excited about this company. I think a lot of institutional investors actually know about Alico. It seems to be a pretty popular company whenever I've done write-ups on it. A lot of people know it's there, and a lot of people hate it because they had thought of this company specifically as a citrus operation. Whenever I wrote it up for land valuations in the past and stuff, I always got a lot of kickback that, oh yeah, they might not ever do anything with this land. And everybody was specifically evaluating this as an operation that the company was constantly talking about basically ceasing to do. So I think now that the story has officially changed, they came out with a presentation in January for this strategic shift, and they've also had an investor presentation that I believe came out in June, and that also went more into depth on their future plans. I think they're saying that Corkscrew Grove is worth $335 million, but the other company that had just bought like 2,700 acres right in there, that Corkscrew Grove area, if they get that $83,000 a lot, if Alico was to get something like that, that grove would be worth, it wasn't a hard number, but it was like $735 million, which is like, double their current market cap. I think their market cap is like 350 million right now.
Interesting. Okay, so just that one property doubles their market cap.
Yeah, 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 yeah. $249 million is their market cap right now. So yeah, it would triple.
Interesting.
And they're expecting to get 335 million, but just other developers and what they're expecting to get. If that's probably a super enthusiastic projection, but I do think that property is probably worth more than the $335 million that the company says it will be.
This episode is brought to you by Event Driven Daily. If you're spending too much time trying to uncover special situation stocks, make sure to look at Event Driven Daily's Morning Brew newsletter. Each month, we scour the internet to find as many special situation opportunities as possible, and then send each and every special situation to free subscribers in a neatly packaged email. This service is absolutely free and will save you hours each month trying to source special situation ideas. Go to www.eventdrivendaily.com and look for the subscribe button at the top of the page. That's www.eventdrivendaily.com. So basically, there is a lot of pessimism about this company because they've been saying this for years. Institutional investors have been looking at it and saying, you're never going to develop this property. It's always going to be a citrus plantation or whatever. And finally, they're going ahead with the project. So I guess that explains why the stock is trading so cheap relative to the land value, right?
Right. Yeah. Yep. The stock has just now started to shoot up, but yeah, that company was just really getting beat down really ever since 2018. They had a series of bad hurricanes, and citrus greening was essentially a disease that's carried by this thing called a Asian psyllid. It's a tiny bug, burrows in the tree. Their saliva carries a disease, and that basically over time kills the tree. But while it's also infected the tree, it greens the fruit, prevents it from maturing, and then has it drop from the tree so that it cannot be harvested. And yeah, that's basically decimated citrus production in not just the US, but now Brazil. That 75% of Alico's remaining land that is citrus operations that they do not intend to build housing on, they are talking about pivoting away from citrus operations into other agricultural operations. And that's something that is still a little bit of a mystery to exactly what that's going to look like.
Why would they do that and not just develop the rest of the land? Supposedly, if they can get this much for the land that they are developing, then, the play would be just to develop the rest of it as well. Is it permitting or?
Well, their land holdings are across, I can't even remember how many counties in Florida it was, like 9 counties. They're in various spots. And I actually do think that they will sell off the rest of their land eventually, but I don't know how long that would take. Basically, this company just plans on, if they can still maintain profitable operations, to just use those operations to generate income. They've paid like a steady dividend for quite a while. They intend to continue paying dividends like that, and they are going to continue to pay special dividends into the future.
Mhm.
And I think they'd like to do cash flow for that, and just to help pay for any of the expenses that they're going to incur when they actually do develop these properties.
What's the plan for the cash once they develop the properties? Has management said anything about that? Are they going to be, sending that to shareholders or?
In the past, they've paid special dividends when they've done land sales, as well as pay down debt. And I expect them to do that here. John Kiernan, who's the CEO of Alico, is a shareholder too, and has done business with the company for a long time. And he seems like he is really, really focused on like shareholder value. That's all he's talked about for a long time. And it's wild that more people don't know about Alico transitioning into a land development play sooner, just because he's been like absolutely forthright about his intentions with this company for quite a long time throughout the entire process, even when they were just initially hiring people to kind of poke around and see what their company properties might be worth.
Does he own a lot of stock?
Yeah, John does own a decent amount of stock. He's also bought in some of the property when company had sold off chunks of their ranch land, because they used to do citrus, and I think it was like 25,000 or 30,000 acres of like ranch land that they eventually sold off over time, which a lot of that was paid down debt. and was returned to shareholders.
So have management been buying back stock, or have they been purchasing shares for themselves?
I have seen 13 insider trades, and a lot of those are stock options, but nobody is selling any of their shares, and people are buying a little bit.
Hmm. Okay.
I do like following when management's buying, especially when management's been making good decisions. And yeah, I think that this stock is going to be a multi-bagger.
Interesting. Yeah, I definitely like insider buys as well. Anytime a company is buying back shares or the management's buying shares, it's definitely a major sign when it comes to my own investing. Now, obviously, with this big development that they have coming, that's catalyst enough to move the stock. I mean, if the value of the land is, 2x what the current market cap is, and that's, only a small chunk of the land they own, that's definitely going to move the stock, in my view, anyways. But I first learned about this company basically from a post that you made on X, formerly Twitter, and you were kind of making fun of, New York's latest decision. I guess that could be an additional catalyst there. Why don't you talk a little bit about that?
Yeah, so I can't even pronounce the guy's name that he was a candidate for New York mayor. He was a Democratic socialist. But I think as people in those areas get frustrated and try to solve those problems with additional taxes and rent control, just like things like that, like legislation, I think that's going to drive a lot of people out of those places and into places like Florida. Florida does have some, issues with insurance shooting up in price and stuff, and that's kind of spooked some people about the properties down there. But I think that people with enough money and that can do business down in Florida, a little bit more inland, they're gonna like the business friendly environments of those kind of places as opposed to places like New York and California. And even businesses really don't like doing any business in Michigan, it seems like either. And we're one of the few states that actually have population laws right now.
Interesting. Yeah, no, Florida is basically built on a giant prehistoric deposit of seashells. So this is basically it.
I mean, in the
The waves
50s and the
wash over.
70s, it was absolutely pretty much a swamp, and, it's engineering that has made any building on that place possible, so, yeah, I mean, with rising sea levels and stuff, I do think that that may cause, like, an actual problem in the future, and, I'm not gonna pretend like I have solutions to anything or whatever, but, the short-term catalyst in that is that it's probably gonna make land, honestly, more valuable, especially land inland. Because when insurance prices go up and start skyrocketing so much in Florida, sometimes people aren't going to want to move to Colorado, but they might move 20, 30 miles inland.
Right.
And some of those properties might actually spike in price because insurance prices might go down when you're in an area less prone to flooding or has seen less historical damage. And actually, especially this Fort Myers area is
Mhm.
generally fairly valuable because it is in the west side of Florida, and that sees a lot less hurricane action.
So their property for the most part is pretty much located in higher ground areas. They're not going to be subject to flooding then.
Yeah, most of their properties are like Central Florida. Fort Myers is like there's like a little like waterway that kind of works its way in. So that's actually a little bit close to water, but like Lee County, Florida is a lot of their properties. I gotta pull it up on a map. They have some stuff in Panama, which might have like negative connotations for any kind of like increased weather, but that still is on the west side of Florida.
Mhm.
But
Right.
yeah, the majority of their agricultural lands is kind of like Central Florida. And I think that the most centralized of their lands will probably maintain agricultural production on them for the time being until they work out a plan for that.
So I guess home insurance should be a lot cheaper if we're looking at, the middle of Florida.
Yeah, hopefully. And like people are kind of getting priced out of Florida a little bit, but Florida is still growing and it's still one of the fastest growing places in the US. So I'm kind of hoping that some of that normalizes out. I mean, obviously, I think that a lot of that insurance inflation happened a lot because of natural disasters, but it also happened a lot because of inflation
Mhm.
and the added cost that it takes to actually repair a house. So
Yeah.
I'm hoping that if inflation does stabilize, that would help stabilize insurance prices. I don't think they're ever gonna go down, obviously, but, slowing their rise might help stabilize Florida out a little bit.
Yeah, I doubt anything's going to go down in the US aside from the US dollar.
Right, yeah.
So, but with with the flooding in Florida as well, the Dutch have faced water problems for centuries. So if the Dutch can do it, then definitely the Americans can do it as well. This episode is brought to you by NetNet Hunter, the best resource for NetNet stock investing on the internet. NetNets, or cigar butts, are sub-liquidation value stocks that produced such outstanding returns during Ben Graham's lifetime that he gave up all other strategies to focus on them. Professionals such as Warren Buffett and Joel Greenblatt also launched their career on the strategy, and that proved quite successful to say the least. Right now, you can get a free monthly NetNet stock pick from NetNet Hunter's free newsletter. Visit www.netnethunter.com and look for the link on the homepage.
Yeah, and I mean, all the negative pressures that we've seen on US housing, I'm Mr. Gloom and Doom kinda sometimes when I, like, look at things and,
Hmm.
I would have thought there would have been some negative pricing pressure on the US housing market by now, but it doesn't seem like it.
Right.
I mean,
Right.
like,
Yeah. Yeah.
even when home sales and stuff like that have slowed significantly, it really seems like housing prices just do not wanna make, like, dramatic steps downward.
Right. If you look at existing home sales, they're basically at year 2000 levels. I mean,
Yeah.
it's definitely significant recessionary levels right now. We're at the same point that we were in 2009, so during the GFC. So definitely there's a drop in activity there. For new home construction, I think that we're also kind of in a recessionary kind of time frame right now, where new home construction really spiked, I guess, in 2021 and maybe 2022, but it's come down a lot because the inventory's built up quite a bit. Now, obviously, one of the reasons that the price of this company might be so low is because we are looking at a very depressed period for builders and developers.
Yeah, yeah. My other housing stock that I've been looking at have kind of came down too, but Alico's price falls have almost always like really lined up with their citrus harvests and their inability to just like see any large year over year increases that were like super meaningful for them. They were kind of like always missing their mark on that. And then their citrus greening treatments and things like that, whenever they would release news about that essentially not working or not having any serious effects that they actually noticed, it seemed like that stock really dropped. But yeah, I think long term housing prices, and especially in places like Florida, should actually do well. It's one of the reasons why I think existing homes will do well is it is so expensive to build a new house, just raw material cost.
Right. Yeah, definitely. Now, this reminds me of another company that I know about that I've been kind of eyeing for the last couple of years, but haven't really pulled the trigger on. And that is a company actually up by Panama City,
Hmm.
a company that you probably know as well called St. Joe. That company is kind of interesting because you have a huge amount of land, and the land, just from liquidation value might be worth, I don't know, $200 a share. Looking at the stock chart right now, and it's selling for just, $52 a share. So yeah, have you looked at St. Joe at all?
Yeah, I have a little bit. I haven't written it up just because the market cap is a little bit bigger than what I generally go after. But yeah, this thing does seem to be selling pretty cheaply.
Now, one thing that I kind of suspect is going to happen in the US is massive inflation. And the reason is because, you have this massive deficit there that, just keeps growing. Your debt keeps growing, and then you have massive interest payments right now. So the only way that I really think that the US can get rid of its debt is if it inflates it away. So how do you think about this company in an inflationary environment?
That's one of the reasons why I like owning land because you can't print it basically. Uh
Right.
I do wonder what's going to actually happen with our national debt and our problems that we have with inflation. And yeah, I mean printing away the problem would be the most obvious answer that we're never going to default, and we're probably not going to let our credit rating slide. So the only other way to do that is invent more money. So
Right. And
I think
nobody's going to cut spending either, right?
I mean, Reagan wanted to do like all these massive cuts to our taxes, and part of that was to also cut massive parts of our government out. And people don't like that. People don't like that now. I mean, I think when Trump has talked about trying to do that, and he hasn't done it in the way that to the extent that he said he would, and even if he did, honestly, people aren't gonna like that. They want something out of their government, whether they want to admit it or not. I think and people are kind of have accepted a certain lifestyle that I don't think they're going to be unwilling to change that rapidly.
Absolutely. I've read Dying of Money. Have you read that book?
I have not.
Okay, well, it's a riveting read about inflation and interest rates, so you should probably get on that. But yeah, one of the things that they say in Dying of Money is that one of the few asset classes, or one of the few people that benefit in an inflationary environment, are actually the farmers, because they're very close to the land, very close to real assets, and then usually they have a lot of debt as part of their farm. Everything's kind of mortgaged, but as they grow, they get more and more money for their produce or whatever, and the debt shrinks in value. So
It's obsolete.
right, right. So for an inflation hedge, farming is actually pretty good. Maybe management's thinking of something like that.
Yeah, I've thought about that too because I've read other things about like the Weimar Republic and the inflation that had happened in the 20s, and we always talk about how poor everybody got, and the average German definitely got poor, but it did sound like basically anybody with assets, especially assets that produced things, really like got super 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 rich. And you kind of see that
Right.
in other countries that have like instances in their history where their money becomes worthless. Like in Russia, one, they tried to take their food away from them, but
Yeah.
the Ukrainian farmers were some of the richest like people in the entire USSR at that point in time, and people basically stole all their shit
Yeah.
because of that. And that's a very good
Right.
point, and I do think that that'll happen. Anytime that there is inflation, just like in 2021, 2022, when we started experiencing inflation, stocks shot through the roof. I expect that to probably happen again. It's kind of weird when we hear negative inflation. When we hear news of inflation going higher, people take that so negatively in the market, but honestly, at least for asset heavy companies, that should be a godsend.
Right. One of the things that I found in the 70s is that REITs, real estate investment trusts, actually fell off a cliff, going into the mid 70s, and then slowly kind of started pulling out of it. So the value definitely eroded with them, and you would think, that's pretty close to real assets as well. I mean, it's not farmland, it's not, raw resources or anything like that, but you wouldn't have expected that. Now, with this company, supposing that we do get into a period that's kind of akin to the 70s, I think probably the stock would probably drop, right? And then, you might have a chance to scoop it up, much cheaper. But if you're buying today and they do send that cash from, the development sales as a special dividend, then your cost basis would be next to nothing as well.
What percentage of Joe's revenue is derived from like their like clubs and stuff? Like they basically own like what does it say here? Like golf clubs, beach clubs, golf courses, like retail outlets. Because that's a lot more sensitive, I think, to down economic downturns than just residential housing. Because that's the last thing that people are going to give up.
Yeah, it's interesting because there's kind of two aspects. I've been kind of worried about inflation for a while now, so I've been doing a little bit of research on it. There's kind of two things going on there. There's, the stocks of companies that hold, real estate, and then there's the actual real estate asset itself. And what you find is that in the 1970s, housing did really, really well. So housing far outpaced, the rate of inflation, and anybody who bought a house and mortgaged it, at a fixed rate just did, extremely well from a net worth point of view.
Oh yeah, for sure.
But then on the flip side, you have, REITs and companies that sell real estate, and those might not do as well. I'm just looking at the real estate investment trust, and they did not do very well in the 70s. It could be a function of them being, extremely expensive in the 1960s or going into the 70s as well. Not sure about that. I know that, home construction companies for the most part did fairly good. So kind of two aspects to that market there. So you might see houses do really well.
There's a company that I had looked into called Nobility Homes. I used to own quite a bit of stock in them, and I do believe that they have fallen down too. But they essentially make manufactured housing in Florida, and although their housing sales have gone down a little bit, that company has like zero debt. They will not take on debt. Like that's straight up what Tom will say. He runs the company. I would almost say that I would expect a company like that to do better as housing prices rise and people essentially get priced out of bigger and better houses. But
Right.
the market has seemed to have disagreed with me over the past like year and a half.
We'll wait and see.
Right, right,
I
right.
mean, we are in that recessionary period for housing right now, both for housing sales and new builds. So, yeah, could be just a matter of time. Now, what's the downside for this company if, things fall apart, maybe the development falls apart? What's the downside?
That's one of the reasons why I have so much money in Alico is that I don't really think that there is a lot of downside because so much of the management owns stock. They have returned all of that value in dividends generally, and they have like some debt, but it is very manageable. Obviously, all of their land sales could fall off a cliff, and then you'd, I guess, be left with land that you couldn't sell, which would be essentially worthless. But
Hmm.
that shouldn't happen. This company has actually worked with and been pretty friendly with the Ron DeSantis
Hmm.
administration. They've essentially given a bunch of land to the state of Florida for like natural habitat, like wildlife refuges, things like that. Because they do own swampland that you essentially can't use anything to. So some of it, and most of that's been donated for like wildlife sanctuaries and stuff. So I think that and a lot of their board members are pretty talented real estate people. They've kind of like put kind of like really focus their management team on those areas over the past couple of like 5 6 years. So I think that they should be able to close all this stuff at a decent price. You might get left holding a bag if we do hit a major recession and all of a sudden, even if theoretically land price values spike, they would probably drop off a cliff at first because if ever mass unemployment happens, things like that, nobody's going to be able to buy property.
Right.
I think if you held onto this stock for long enough, it would rebound because it has something that you can't produce more of, which is land people want in an area that people want it, and that is actively attempting to build something that people have to have, which is housing. And I think it's a more condensed, affordable housing too, which is like
Mm.
obviously something that one hopefully should win over local residents for like any concerns over large building projects, and two hopefully should shield it a little bit in case housing prices do decline a lot or demand for like larger houses does drop off.
If people want to learn more about you, follow your work, that sort of thing, where should they go?
I have like two main places that I post most of my like financial thoughts and work. One is like my long form posts. I post on Substack under the Substack The Value Road. And then I basically use my Twitter to promote that and to goof off a little bit. And that's Lee Value Roach at x.com. And yeah, those are my main. I do have a LinkedIn too that I'm kind of messing around with a little bit, but that's kind of up and coming, I guess. I'm trying to figure out the reins of how to operate that. It's a social media network.
Thanks a lot for bringing this up today. I really appreciate it.
Oh, not a problem, man. Thank you for having me.